I don't think there's one thing in macro that we're most concerned about. I think we're just worried about the trajectory that primarily Europe that's taking. We're not worried as much worried about China at this point in time because our view has been bearish on China. So we have not, in our global fund, we don't have as big investments in China. So maybe we should be worried, but I think we're not about that. But Europe and what the trajectory there in terms of regulatory, in terms of what they're going to do with the debt situation is what we probably spend more time looking at. US, we have more exposure than we have in Europe. The macro situation does not actually have a big bearing on what we're looking at, because the US situation, it's more the fiscal cliff, the fiscal debt, and what the government is going to do with their debt ceiling. In the long run, that probably is not going to have an impact unless they decide to hit the debt ceiling, in which case all bets are off. Our view is that neither party, neither Republicans nor the Democrats will ever let that happen. They will drag it on and turn it into, they'll create volatility for both the market and for the business community in general, but they won't make it go bust, which will mean that in the short run you'll have a lot of volatility. There's a lot lower consumer confidence, lower business confidence, but in the long run, all that creates is an opportunity in stocks as opposed to concern.